Welcome to the Market Alert for Friday, the 24th of June 2016. So it looks like the Leave wins the Brexit referendum, and according to headline on Zero Hedge, markets everywhere are crashing. I'll come to that in just a moment. It's not as bad as is going to be made out, and I'll show you why in just a moment. Also interesting here, now it's our turn. Geert Wilders calls for a Dutch referendum. Just as we warned, the historic British rejection of the EU totalitarian rule sparked renewed ambitions to leave the clutches of Brussels across Europe. First to congratulate Britain was Holland's Geert Wilders, who calls for a Dutch referendum as soon as possible. And no doubt this will be followed by Greece, Spain, Italy, Portugal as well. But that's the story so far this morning. S&P futures halted limit down as the VIX spikes, and again, we'll come to that in a moment. So let's just have a look at the market's reaction. Yesterday's trades, of course, as I said, you're better off watching paint dry and standing aside because of the voting, and that turned out to be the case. We just go to the 5-minute chart for yesterday. The market's down quite a bit. You can see there, stuck in a trading range of around 70 points. And then obviously the overnight reaction, the market up initially, then as the out or leave votes went ahead of the remain, the market then moved lower. So we're better off looking at the daily chart on this one. You can see there we've got this huge down of around 800 points on the overnight futures. Let's just go back to August of last year. And August of last year, the 24th of August, we actually had 1,000 points lower on the Dow in the pre-market session when there was no Brexit or anything else. But you can then see the market coming all the way back. And here we've got a situation where we've got 800 points off with the Brexit, and then the market coming off the lows. Now, I'm not saying the market's going to rally from here, and I'll tell you why. What's different to this than August the 24th last year? There wasn't a Brexit. And, of course, as you're seeing, the Dutch now want a referendum. It just depends how many more. And if it all continues to fall apart in Europe with more and more countries wanting referendums, this is going to have a major negative impact on the market. As I've said for years, we've had asset bubbles pumped up in these markets with debt, borrowed money, and now we're going to start to see this money leave the markets as people want to obviously protect the positions. It's going to take a few days for the markets to find a level, and I suspect that the plunge protection team will be out doing their best and their damnedest to actually keep this market up and holding the market on the highs. With regards to the pound, this dropping sharply, lowest level since March 85, down to 131.90. But yeah, that's the pound's reaction to the market. And the metals market, you can see there silver up sharply. Let's have a look at gold, 13.23 for gold as well. Big move in gold there. We just make that a weekly chart. You can see how that's moved as well. It's come off the highs, and again, don't be fooled into thinking that the markets are going to crash because of the Brexit. They will do whatever they can. I know that Draghi and Carney had a plan and had already printed up billions of swaps in the event to hold things together if there was a Brexit win. And if you do the research for that on the internet, you'll find that also. Without a shadow of a doubt, this is not the falling apart of the markets, but we're going to see some volatility at last return to these markets that may actually have the other extreme now, certainly for today, where the volatility will be incredibly wild, and also again create very wide bars and wide-ranging bars. On the implied volatility, this is not updated. This is the close of business yesterday. This is delayed. It's 12.78, and that's likely to, well, obviously it's going to be catapulted as the VIX. So if we have a look at the volatility index, which is actually live, if I can find one for you, we've got the VIX there for the June contract. I'll just put that in there, and you can see the market, the VIX there moving sharply higher, and that was yesterday when it exploded in anticipation, and then that's just come off the highs as well. If we go down to 4-hour chart, you can see how this was moving up on the overnight there. Obviously, as I say, to hedge off some of the risk to the downside in the futures market. Well, there's not a lot else I can really say. We're just got to wait and see how this unfolds during the pre-market session. But like I say, keep in mind that in August the 24th of last year, the market was down 1,000 points in the pre-market session on no news. But again, this slightly different. Let's see how Deutsche Bank is affected by this, and how the market is actually going to take all of that into account. I'm hearing a rumour at the moment that Deutsche Bank have made a few people redundant. Whether it's true or not, I do not know, but it's in the thousands, and I'm sceptical of that rumour at the moment until it's confirmed. And again, the sort of effect on the markets following that. Right, that's it for today. I will drop you a note if I see anything that you should be made aware of. Other than that, it's the end of the week. Have a great weekend, and I will speak as and when. Thanks for watching.